Ladies and gentlemen, thank you for standing by. Welcome to the Supercom third quarter 2014 results conference call. All participants are present in listen-only mode. Following management's formal presentation, instructions will be given for the question and answer session. As a reminder, this conference is being recorded. I'll now hand the call over to Matthew Sullinger of Supercom. Mr. Sullinger, would you like to begin?
Okay, good morning, everyone. Thank you very much for joining us today for Supercom's third quarter 2014 results call. Joining us on the call are Ari Trabelsi, President and Chief Executive Officer, Simona Green, Chief Financial Officer, and Ordan Trabelsi, President of Supercom North America. Our press release detailing the quarterly results crossed the wire at approximately 8 a.m. this morning and is available on the company's website at www.supercom.com. Following comments by management, we will open up the floor for questions. In addition, we encourage you to visit the company's website for further information regarding solutions, services, and products. Before we start, I'd like to point out that this conference call makes certain projections or other forward-looking statements regarding future events or future performance of the company. These statements are only predictions, and Supercom cannot guarantee that they will, in fact, occur. Supercom does not assume any obligation to update that information. Actual events or results may differ materially from those projected, including as a result of changing market trends, reduced demand, and the competitive nature of the security systems industry, or due to risks other identified in the documents filed by the company with the Securities and Exchange Commission. In addition, following the company's disclosure of certain non-GAAP financial metrics in today's earnings release, these non-GAAP financial metrics will be discussed during this call. Such non-GAAP metrics are used by management to make strategic decisions, forecast future results, and evaluate the company's current performance. Management believes that the presentation of these non-GAAP figures help investors understand and assess the company's ongoing core operations and prospects for the future. Unless otherwise stated, it should be assumed that the financials discussed in this conference call will be on a non-GAAP basis. A full reconciliation of non-GAAP to GAAP financial metrics is included in today's earnings release. So at this time, I would like to turn the call over to Mr. Trabelsi. Ordan, the floor is yours.
Thank you, Matt. Good morning, everyone. I'd like to welcome you to our third quarter call. First, I'd like to thank the shareholders who have supported us over the years. We will honor your support by continuing to execute on our business plan to provide EID scalable platforms and end-to-end innovations and solutions with our suite and products and technologies. I'd like to begin with some high-level color on the quarter. Then I'll yield the floor to Simona Green, our CFO, who will highlight financial results for the quarter. When she is finished, Ari will make some closing remarks and open the floor for questions. To begin, let me discuss what we are seeing in the industry. According to analyst reports, national EID global revenue is estimated at over $12 billion annually. Our addressable market, developing countries and international tenders between $10 million and $200 million is estimated at over $1.5 billion in size. Our segment of the market is seeing consistent and very rapid growth. Our customers have expanding technology infrastructure and increasing security needs. Once we gain their confidence, we are able to offer more products and solutions. This allows us comfortable expansion into adjacent markets, such as the market for border control e-gate systems, which alone is projected to continue growing at a rate of 20% per year to over $750 million by 2018. We've already been experiencing this forecasted growth, and in conjunction with our recent contract wins, we are seeing an increase in RFPs in our market segment. Our bidding process has also become more efficient. Where once we were able to send out only one proposal every 1 to 2 months, we can send up to 3 proposals per month, a significant increase in our bidding capacity. As we implement more successful projects around the world, we're getting better intelligence from the field, which helps us craft more appropriate proposals. Lastly, Supercom's reputation for excellence is reaching neighboring countries, enhancing the level of comfort and desire for new customers to start working with us. We cannot guarantee a higher rate of contract wins, but we are approaching the challenge systematically and increasing the likelihood of winning new business over time. On August 4th, we announced a new $22 million contract, which is included in the cumulative $57 million in contracts we have won so far this year. We secure the contracts faster than our historical precedents, which suggests both that our sales process is becoming more effective and competitive pressure is declining following the consolidation with OTI Smart ID division, previously a major competitor. The contract includes 4 modules: biometric visa, biometric e-gate for border control, a biometric e-passport system, and a biometric resident identification system. This type of multiple module government contract is where our EID platform offers an advantage, as we deploy multiple modules with one single platform, the Magna platform. We previously mentioned that the majority of revenue from implementing this contract will be recognized in the 9 months following the announcement. We serve different governments in various parts of the world with very different cultures and business practices. Hence, each contract is relatively unique. However, let me remind you how the typical contract is structured. As I mentioned in the past, we land a contract for a stated value, which we then implement over a stated period, booking the contract value as revenue. After the implementation is completed, we typically receive between 20 to 30% of the contract value as recurring revenue annually. This is additional to the initial stated amount. We currently receive such recurring revenue from contracts previously implemented by both Supercom and Smart ID, as reflected in our Q1 and Q2 revenues. As we continue to win more new government customers, our base of recurring revenue will grow, and with it, our margins. In the EID division, we plan to grow organically by adding new EID government customers and by offering more services to each of these existing customers, which is much more simple once you get your foot in the door with the first system deployment. We also have planned growth in our other 2 divisions, the M2M IoT division and the new mobile financial services division. The M2M and IoT, Internet of Things, markets are emerging very quickly globally. According to Gartner research projections, our applicable market for the public safety sector alone is expected to exceed $6 billion by 2018, while the general IoT market is expected to reach $300 billion in size by 2020. Supercom has invested many years of R&D developing proprietary active RFID technology for the machine-to-machine or M2M space. The technology boasts a unique mix of capabilities, including extended battery life and long range. We've been selling these components based on the technological prowess alone for over 7 years to customers around the world. In the past year, we have shifted our business model to a solution offering rather than a simple component. This leverages our brand and decades of experience in providing full turnkey IT solutions and allows us to generate much higher margins and recurring revenues. Our components now can also seamlessly communicate with smartphones to easily make other devices smarter. And together with their inherent technological advantages, we plan to disrupt a few chosen verticals. In the electronic monitoring for public safety segment, we began to offer our enhanced Pure Security electronic monitoring suite to customers in the U.S. market in August 2014, and we launched a suite in Europe, South America, and Africa in September 2014. We have been participating in international formal tenders. Earlier this year, we were approached by some of our customers in emerging countries to offer a payment capability for unbanked customers or consumers. Research indicates that 2.5 billion people globally are unbanked, but over 1 billion of those people have access to a mobile phone. In response, we're presenting our MPay, mobile money, and mobile payment suite at one of the largest payment conferences in the USA, the Money 2020 show in Las Vegas, today through November 6th. In parallel, we're also presenting the product in Paris at the Cartes Secure Connections 2014 conference starting tomorrow until November 6th as well. Our Pure Money platform provides a wide range of mobile money and banking applications and services using a hybrid of components and services to enable secure mobile transactions. The Pure Money platform offers payment capability to those without bank accounts and appeals to our existing client base of government because for the first time, they will be able to provide mobile money solutions without partnering with a mobile network operator and dealing with expensive terms and fragmented market share. Our Pure Money solution works on virtually any phone, which is a very critical capability in Africa and South America. However, mobile payments still face significant challenges in developing countries as well. For example, mobile payments for Apple iPhone users are only possible using the newest model iPhone 6 with Apple Pay. Hence, our newest platform, Supercom's Super POS, a mobile point of sale, which allows users to employ any mobile phone to make mobile payments by turning any iOS or Android-based tablet or smartphone into a robust, secure mobile payments POS. Secure POS supports a number of secure ways to pay, including NFC, BLE, ultrasonic, and HCE, and utilizes biometric authentication features. And, very importantly, no additional hardware is required, unlike with other currently available systems. This works together with SuperPay, a secure mobile payment hybrid suite that allows mobile users to securely make mobile payments using virtually any phone, and SafeMoney, a built-in mobile automated security threat scanner providing secure usability over uncontrolled network channels by identifying and neutralizing threats and suspicious activities. The mobile money market is still in its infancy. Projections show that by 2017, $700 billion in mobile transactions will be executed by 450 million users, representing an average annual growth rate of about 35%. Since our solutions surmount some of the biggest challenges in this space and leverage existing relationships for deployment, we believe that our mobile ID and mobile money technologies, created on the back of our many years of experience in this segment, should help us gain significant market share by 2016. For Supercom, our early penetration and capture of even a small portion of this fast-growing market not only represents a huge and long-term growth opportunity, but also greatly exemplifies how we're using technology innovation to provide immense value to our rapidly growing customer base. We will most likely seek to partner with banks, governments, and merchants and charge licensing fees as well as per transaction fees. Not only are we executing on our business plan, but we are also making strides to assemble a corporate team that will propel Supercom to the next level. We have been adding to our sales force and focusing on systematically improving our processes. Operationally, we remain vigilantly focused on efficiencies, which has been part of our DNA since the beginning. In doing so, we're able to utilize revenue growth to increase our margins and at the same time invest more in R&D. On the M&A side, we look for businesses or assets that can significantly increase the revenue base while leveraging the existing lean cost structure. The December 2013 Smart ID acquisition clearly demonstrates this strategy. Keep in mind that any acquisitions we pursue must be accretive. Now I'll turn the call to Simona Green, our CFO, for an overview of the third quarter financial results. Simona.
Thank you, Ordan. I will now walk you through our financial results for the third quarter of 2014 compared year over year with the third quarter of 2013. Thereafter, we'll be happy to take your questions. Revenues for the third quarter of 2014 was $9.1 million, well ahead of the $2 million reported in the third quarter of 2013 and an increase from the $7.1 million in the second quarter of 2014. I will be presenting the rest of the financial results on a non-GAAP basis, which excludes the non-cash income tax benefit we had in 2013, as well as amortization of software and IP and customer contracts to intangible assets, which were created as a result of the acquisition of the Smart ID division in December 2013. For a full reconciliation from GAAP to non-GAAP numbers, please refer to the press release we issued this morning. Our gross margin in the third quarter of 2014 was 76%, below the 82% in the third quarter of last year, and in line with the 76% margin in the second quarter of 2014. Please bear in mind that there are shifts in gross margins relating to the proportions of revenue that is recurring and the portion which is derived from new contracts. The recurring element tends to be at a very high gross margin, while new contracts and initial installations tend to be at lower gross margin. Normally, our expectation would be for gross margin to tend towards the 75% level. Operating income in the third quarter of 2014 was $4.1 million, or 45% of revenue, compared to $0.5 million, or 25% of revenue last year, and an increase from $2.6 million in the second quarter of 2014. Net income was $4.1 million, compared to $0.4 million last year. Earnings per share was 30 cents versus 5 cents last year, and 19 cents in the second quarter of 2014. EBITDA for the quarter was $4.2 million, compared to $0.5 million last year and $2.6 million in the second quarter of 2014. On the balance sheet side, by the end of the third quarter, we had increased our cash and cash equivalents by over $3 million, trade receivables continued to remain at high levels by the end of the quarter, reflecting the significant revenue increase during this quarter. We increased our working capital to $14.2 million at the end of September versus $3.9 million at the end of 2013. Shareholders' equity increased to $29.1 million at the end of the third quarter, up from $19.4 million at the end of 2013. With that, I conclude the financial summary, and now I will hand it over to Aryeh. Aryeh? And open it for questions. Excuse me. Yes.
Operator, can we open up for questions, please?
Yes. Thank you. Ladies and gentlemen, at this time we begin the question and answer session. If you have a question, please press star 1. If you wish to cancel your request, please press star 2. If you're using speaker equipment, kindly lift the handset before pressing the numbers. Your questions will be pulled in the order they are received. Please stand by while we pull for your questions. The first question is from Josh Nicholas of B. Riley. Please go ahead.
Yeah, looking at the August 4th announcement for the $22 million contract, over the 9 months that the revenue is going to be recognized, is that pretty level, or are you anticipating that the revenue recognition might be kind of lumpy?
The revenue recognition for new deployments typically grows over the first 9 months, quarter after quarter after quarter. So at the beginning, the recognition is a bit slower, then it ramps up towards closer to the end of the 9 months. Just a natural process as we deploy our system.
Okay. And real quick, it looks like R&D and the sales marketing expense have been bouncing around a bit. I was a bit surprised that sales and marketing would be down considering a new contract announcement. I figured that you might have to pay that out. Could you give me a little bit of color on the R&D and sales and marketing expense, or how to think about it a little bit?
Our sales and marketing expenses are usually pretty much the same, in the same frame. The only thing that is a decline between one quarter to another are sales and marketing expenses related to contracts. This quarter we don't have any promotions expenses or any other outstanding sales and marketing expenses unusual. Regarding the sales and the R&D expenses, we recognize one of our capitalized R&D expense related to one of our new products during this quarter.
Okay, thank you.
You're welcome.
The next question is from Brian Abrams of Lazarus. Please go ahead.
Congratulations on another great quarter, guys. I want to ask a couple of questions. First one about the new mobile payment products. You suggest in your opening remarks there might be some synergies with the EID and government business. I'm wondering if you could elaborate on that a little bit, and also if you could speak to the revenue potential for these products in the next 1, 2, 3 years.
Okay, thanks, Brian. So the whole notion of we're deploying 2 different developments here: the mobile money and mobile payments. Mobile money is the notion more for developing countries where you can transfer payments between people and give a bank account through a mobile phone to the unbanked, which those populations are more prevalent in developing countries. The synergy here is that the governments which we are already serving need to collect payments for their passports, their ID cards, their taxes, their bills from their citizens around the country, and they don't have a unique and proper way to do that. In places where their citizens are spread out around and there's no proper banking infrastructure, they have trouble doing so. And with the current technologies out there, they weren't able to find a solution which had appropriate pricing and could be ubiquitous enough among their citizens. So our mobile money platform, which runs on any mobile phone, which work great in regions of the world, helps and solves that request. Your second question was the amount of revenues. We're currently planning on deploying the mobile money through our current government customers, and through that expanding into other regions around the world. The market is very big in size right now. We don't yet know how much of the market we will be able to take a grasp of, but even a small portion of this will be significantly larger than our current revenue base, because we're talking about very high growth and large payment markets in developing countries around the world. And the notion of mobile payments, again, in the U.S. also, there's a lot of problems with paying with your phone. You cannot pay with your iPhone 4, your iPhone 5. Phones that don't have NFC capabilities cannot do mobile payments. And over there, it's a very large market as well, and many are trying to reach into. We have a specific technology which allows any phone to make payments, and we hope to also capture a nice market share there.
That's great. And I guess that leads to my next question, which is, you spoke in previous quarters about targeting about $100 million in revenue in the next few years. I'm wondering, A, if you still feel like you're on pace to reach that goal, and B, what do you think the product mix might be at that point between the EID government business and some of these newer products on the RFID or M2M or MPay side of things?
First of all, today, a quarter after we talked last time, we feel more confident that we reached this point and even higher numbers. What we see in the increasing demand to our product and to our solution, that probably will be winning a larger contract to be implemented in shorter term that we anticipated originally. So we do believe that everything we said last quarter, we feel confident we'll be reaching this point even earlier. Now about the mix between revenue, the revenue between the EID, end-to-end, and payment, we do believe that in 3 years, our revenue from the end-to-end is going to be over 50% of our total revenue. And from the EID, although the EID is growing very fast, we believe that the end-to-end market has a much growing path. So to answer your question, yes, we are very confident reaching this point.
Great. Thanks, guys. Congratulations again.
Thank you.
If there are any additional questions, please press star 1. If you wish to cancel your request, please press star 2. Please stand by while we pull for more questions. The next question from Yi Chen of Aegis Capital. Please go ahead.
Hi, thank you for taking my question. My first question is, can you clarify for us the products that you plan to market in the U.S.? Does that include the pure security solution and also the mobile payment solution? Thank you.
Sure. So regarding the pure security solution, we are launching a product which is a house arrest or a GPS tracking product for offenders. The current technology, incumbent technology, is a one-piece GPS that you put on someone's leg. The problem is that that unit has GPS, GPRS, and everything in one place. The battery runs out after 2 days, leading the offender to actually connect his leg to the wall, which is not only unsafe, but also likely to be forgotten. Our solution has a battery life which lasts between 3 to 5 years on someone's leg and inherently communicates with the mobile phone to add more capabilities and advantages. Regarding the mobile payments product, we have a whole suite. We have the Super POS, which is a mobile point of sale, which allows any merchant in the U.S. or any person, for example, giving tutoring lessons or guitar lessons of any sort, to make their phone or their tablet into a mobile point of sale with just software, no additional hardware needed. We have software for the mobile phone, for any type of phone, which allows you to make those payments. So you can have an old feature phone from Nokia, or you can have an iPhone 4, or you can have the new Androids. Regardless of the phone type, you can still come and do a payment just by bringing your phone close to the mobile point of sale.
Okay. I mean, regarding the recent news that the Apple payment was rejected by several major retailers in the U.S. Because they have prior contract obligations to implement another different, although might not be as convenient as Apple Payment, different system. So do you see that as kind of an obstacle to you for marketing your mobile payment technology in the U.S.?
Well, it certainly is an obstacle, but we do not see it as a major one because our platform does not require any additional hardware or any additional systems. You can put additional software on your current point of sale systems and allow all these new billions of phones around the world who currently cannot do mobile payments to now do mobile payments at your merchant location.
Okay. Should we
over time,
expect?
Yeah.
Sorry,
over time.
Oh, go ahead. Sorry, go ahead.
I'm sorry. Over time, the economics will also be much better for merchants as they are essentially taking some players out of the chain. But that's more into the future. I'm sorry. Continue, please.
Yeah. Shall we expect some revenue from either the pure security solution and also the mobile payment solution in the U.S. in 2015?
Yes. I mean, we already have a contract for both of them. For the pure money, we have already contract that we're implementing them, 3 different contracts in many countries. And for pure security, we already have contract as well. So we should see substantial revenue in the year 2015 for both product lines, which you just mentioned now.
Okay. Okay. And my second question regarding the financials, can you give us some kind of guideline as to how much you are going to spend on R&D and also selling and marketing expenses going forward?
Okay. In general, R&D we're going to keep it in the range of 5 to 7% every quarter, and we believe it's going to be a substantial amount of investment because we do believe that our revenue will grow. The second thing about the sales and marketing, our sales and marketing is mainly our fixed sales and marketing group around the world, which we are increasing almost every day in order to capture more and more sales. In addition to that, we have what we call promotion, or what we call relative to our sales representatives around the world. So we believe that it should continue to be in the range that we see this quarter.
Okay. Could you tell us the current share count? The number of shares outstanding?
I think it's close to 13.7 million shares.
Okay. Okay, got it.
There's
Thank
no
you.
change this quarter.
Okay, thank you.
The next question from Mako Seeger, Roth Capital Partners. Please go ahead.
Hey, good morning. Just a couple. Most of my questions I think have been answered, but maybe some clarification here on the mobile money product payment products. They're going to contribute in 2015, but is there first half or second half? And then can you describe the margin structure for those products? And then finally, are EID products a prerequisite for any of the payment products going forward? Thanks.
I'll answer the first and then ask for clarification on the second question. We should already start seeing in the first half of 2015 some revenues. The general structure from payments are either from the point of sale where they pay the fee for the software and from transaction fees. Because essentially, if people are using your SuperPay on your mobile phone, then you don't have to go through a credit card. So some of the transaction fees are going to be going to us. Those are the 2 main modules, or the main business models for that. What was the second question?
Just kind of maybe
we'll see a few $1 million of revenue from the mobile payment suite.
Yeah. The second part was maybe describe the margin structure for that revenue stream. You know, is there a level that you can disclose for us from that perspective, and then, you know, are the EID products prerequisite at all anywhere for the payment products? Like, do they tie together?
We are not going to disclose the gross margin for the pure money or pure. Those it's going to depend on structure we'll do with our partners around the world, both banks and others. But we do believe this is going to be above 80%.
And in terms of the EID prerequisite, I'm not sure if we understand what you mean. It doesn't have to have. It doesn't have to be.
Yeah, that's what I mean. You have to have them, or is it better to have them than not have them?
No, well, if we have an EID relationship with that government, then it just helps us deploy the payment solution to them. But it is regardless, we can go to a new government, offer them only the mobile payments and mobile money solutions.
We have to understand, in general, when we are going to install our Pure Money solution into some new government contract, once the citizen will use our Pure Money solution to pay government, then later on there will be a requirement for our Super POS from other groups that will probably would like to take advantage of this type of method, and by this will increase our revenue also from the private and commercial market.
All right, great. Thanks a lot.
Thank you.
The next question is from Robert Schnell-Dalchery. Please go ahead.
Hello, nice quarter.
Thank you.
Thank you.
From a receivables and cash standpoint, both moved up in the quarter. I'm just wondering what your thoughts are about those numbers moving into Q4. Do you expect to, generate decent cash again, and will your receivables balance start to flatten out here? And then I'd also like to know what the current status of your NOL is. Thanks.
Okay, first of all, our cash flow is positive and growing fast. Right now, I think in the first month, now from the end of the quarter, we received additional almost $6 million in cash, and we expect to receive similar number in the next 60 days. But as you see, our revenue is growing and our receivable is growing, but from cash flow point of view, we passed off the point that we're investing into the operation. We have a very positive cash flow, and we continue and believe that it's going to be growing in a very fast rate.
Hey, could you update us? Yeah, could you update us on what your net operating loss carry forward is that you have at the company?
Right now, our NOL is that we have NOL both in Israel and in the U.S. And right now we are reevaluating our NOL back to see what we're going to do in the year 2015 in terms of tax asset or using the tax asset.
And could you let us know what that number is or was the last time you went through the review?
I think it was
around the $15 million free NOL that we still have, that we still analyze it, and will be finalized by the end of the year.
Okay, could you repeat that number? I'm sorry, I missed it.
Additional $15 million.
Okay. Thank you.
Thank you.
Thank you.
There are no further questions at this time. Before I ask Mr. Trabelsi to go ahead with his concluding statement, I would like to remind participants that a replay of this call will be available in 3 hours on Supercom's website, www.supercom.com. Mr. Trabelsi, would you like to make a concluding statement?
Not to be hired.
Thank you. On behalf of management of Supercom, I would like to thank you all for joining us today. I look forward to next speaking with you when we discuss our fourth quarter and full year results in about 3 months from today. Have a good day.
Thank you. This concludes the Supercom Limited third quarter 2014 results conference call. Thank you for your participation. You may go ahead and disconnect.